So let's start. First of all, those who don't know about me, I'm Nilantha. I have been lecturing for this subject last, I would say, from 2014 onwards. Therefore, within this 2 hours time, I believe I can do a fair justice for you guys, right? Fine. Okay. When it's come to AAT auditing paper, I just downloaded the last year, the recent paper, July 2020, not recent one, but this is a very latest paper, July 2023 final paper, financial controls and auditing is a subject name basically. Here, I think Evans would have been explained this properly, the paper structure. You have 3 sections, section A, section B. Section A is having 4 questions, section B is having, I think, again 2 questions, 5, 6, and 7, 3 questions. And question number 8 and 9 is from section C. So that is the paper composition. Since this is very short discussion, I mean 2-hour discussion, I'm not going to explain everything in detail in this paper structure and advise everything. But let's assume this as a focus session. Give me a second. So this will be a very focused session. Here, the main focus is how do we face to exam? What are the important areas that we need to, focus on? So that is that the focusing on that I have prepared this model paper. In this model paper, after this paper, I will share with you the model answers also. But here we have more than 9 questions, and some of them are, very important areas. So then, based on the importance only, I am going to pick the question from this paper. Otherwise, we might not be able to, cover everything within these 2 hours time. Okay. In addition to that, this is one of the summary, I have one Excel which is developed by me. This has all the accounting standards that are relevant for your exam at your level in summary version. Now look at this SLA is 300, audit planning standard. The summary of that you can see here. And likewise for all auditing standard summaries I have developed here. So then you can, you can go through them, this and, prepare for the exam. So here almost all the standards I have summarized. So I'll share this as well at the end of the session. So then you can, I'll share this with JMC Management Udara. You can share with the students if required. Okay. So during this session, I'll ask questions from you to test your understanding, to understand your knowledge level. So you can interact with me while I'm explaining some of the critical areas of the syllabus, right? Fine. Okay. With that short introduction and short explanation about the content of today's session, I'm planning to move into question number 1. So here, very simple, very short question. Those are straightforward questions, but don't expect this kind of straightforward questions. Prior to this question, a definitely examiner will give you some, some background to this question. But I'm not worried about that background. But I want you to focus on the real requirement of the exam, right? Fine. Keep that also in your mind. Straightforward questions you can't see like this, but the ultimate objective of examiner is to get the answer for these questions. That's why I have taken this straightforward. Okay. Audit risk. Can someone explain me what is audit risk? Short answer. Come on. Otherwise, I have to name. Huh? I can see your names also here. Jivanti. So what's the, how do you explain audit risk? Come on, we have 2 hours. Huh? Mohammed. Cicero.
Auditor expressing an inappropriate audit opinion on the financial statement.
Exactly, good. So auditor express inappropriate audit opinion when the financial statements are materially misstated. So there's a nice word in that definition. What is that? Material misstatement. Forgot about the word materiality, right? So what is the meaning of misstatement? Can someone give me an answer for that? Misstatement? What is the meaning of it? Misstatement. So this is fundamental auditing. So without knowing the definition of this, you can't move forward. Sikra, what is the definition? Misstatement.
There is no error or omission in the financial statements.
Partly correct. Don't say there are no errors and frauds. Misstatement stands for errors or fraud. But auditors or management intention is to see, not management, auditors' intention is to see whether financial statements are free from those frauds and errors. Right? So misstatement means fraud or errors basically. Right? Material frauds or error means ප්‍රමාණාත්මක වැරදි සහ වංචා, in other words. In singular. Right? Fine. Anyway, audit risk definition says auditor express inappropriate audit opinion when financial statements are materially misstated. Meaning, simple idea is what? Auditor will deliver. Remember this is the layman definition of it. Auditor say financial statements are true and fair view. That is what the auditor's conclusion. Auditor say financial statements are true and fair view. But actually, financial statements are not true and fair view. Financial statements are with material misstatements. If non-audit person asks from you, what is the definition of misstatement? Sorry, audit risk, you have to tell, right? You have to tell auditor express true and fair view opinion when financial statements are materially misstated. Material misstatements තියෙන වෙලාවේ already කියන financial statements are true and fair view. And that is the risk that auditors are facing. Technically, we call it as what? Auditor express inappropriate opinion when financial statements are materially misstated. So this risk can be divided into 2 categories. That is how do you explain, right? If examiner ask this question for, let's say, 4 marks or 3 marks, then you have to go another step forward. Here, this is the risk. This is the document that I can share with you, right? Audit risk. So here, definition you can see the risk that auditor express inappropriate audit opinion when financial statements are materially misstated. That is because of 2 reasons. One reason is that risk of material misstatements. Other one is detection risk. Because of these 2 reasons or these 2 components, you have audit risk, in other words. How do you derive how risk of material misstatements link to audit risk? Oh, why this is a component of this? Definition itself says that, right? Definition says what? Risk that audit express inappropriate audit opinion when financial statements are materially misstated. Then material misstatement is what? One component of audit risk. Other component is detection risk. I'll come to this once I explain this. Definition says for us to have audit risk, definitely material misstatement should be there. Those material misstatements, නැත්තම් ප්‍රමාණාත්මක වැරදි සහ වංචා, frauds or errors, mainly coming because of what? You understand? Because of lack of internal controls. In a business, material misstatements, in other words, in your language, fraud or errors happens because of what? Lack of internal controls. Risk of material misstatement are there because of what? Lack of internal controls. Lack of internal controls. That improper or weak internal control, again, we can divide into two components. One is inherent risk. Inherent risk means, again, that is linked to internal control. Inherent risk means risk of having no internal controls. In other words, assuming that internal controls are not there. If you don't have internal control, inherently you have a risk. Let's say bank reconciliations are not preparing, 3 we mentioned is not happening, raw materials are not GRN. So that will lead to inherent risk. That is creating inherent risk, in other words. Right? Risk of not having internal control, inherent risk. Control risk means it's a different thing. Controls are there. Controls are there, but those controls are not operating effectively. Example, if I tell you, bank reconciliations you prepare. Here, bank reconciliation you prepare. But no one is reviewing those bank reconciliations. So no point of preparing bank reconciliation. Control there now, but it is not working properly. Simple example, if I tell you for control risk, at JMC front gate, security officer is there. Let's assume security officer is there, but he is sleeping. We have set up the control, but control is not working properly. CCTV you have fixed, but that is not operating effectively. That is the second component of risk of material misstatements. So these are two components of risk of material misstatement. The important thing is what? Detection risk. Detection risk means when material misstatements are there in an organization, a company or client, auditor failed to detect them. Auditor failed to detect those material misstatements. So this is completely with auditor. These two you can't control. Auditor can't control this part. But this is within the control of auditor. There are material misstatements, but auditor failed to manage or fail to detect them. A risk of not detecting material misstatement is what? Detection risk. So you can see 3 components of audit risk. What are they? Inherent risk, control risk, detection risk. Because of these 3 risks, you have audit risk, in short. So that is the definition for this. That is the answer of this question. What is mean by audit risk? Simple, right? Okay, so I think I gave you fair understanding about audit risk. Audit risk equation is here, but I'm not going to explain that is in detail. But I will give you quick explanation on this, but you can refer to your notebooks that your lecture or your self studies or whatever, right? Here what you need to understand, audit risk equation equal inherent risk into control risk into detection risk. How do you explain this How do you explain this? Simple. When control, listen to me properly, when inherent risk and control risk, we are talking about these two together. When inherent risk and control risk increase in red color, definitely other side of the equation also should be increased. Audit risk also increased. when inherent risk and control risk increased, audit risk also increased. But auditor's objective is what? To decrease audit risk. To decrease audit risk, definitely what you have to decrease? Detection risk, because auditor can't control these two. That is within the business. Internal controls you can't control. So what you can control? Detection risk, because this is within the auditor's control, right? To reduce audit risk, you have to reduce detection risk. When these two risks are at higher level, audit risk also will be high. To reduce audit risk, that is the intention of auditor, you have to reduce what? Detection risk. How do you reduce detection risk? That is the exam question. Examiner can ask, right? You plan the audit properly. You have to plan your audit properly. If you don't plan audit properly, again, you might not be able to detect these material mistakes. Assign more competence, experienced people to the audit, right? Or podi katti daanne epa honda experience. You assign experienced people to audit those clients. Apply professional skepticism, right? Professional skepticism you have to apply. Mean questioning mindset, you have to be alert for the high risk areas. That is called professional skepticism. You apply professional skepticism. And finally, you have to increase what? Increase supervision. You have to increase the supervision. Right? You have to increase the supervision. So these are the actions that you can take to reduce detection risk. If you take these actions, definitely what? Audit risk will be minimized. So if examiners explain audit risk equation, you know that. How do you reduce audit risk? Only way to reduce audit risk is reducing detection risk. No other way. Auditor can't reduce these two because it is beyond the control of audit. Only you can do reducing detection risk. How do you reduce detection risk? 1, 2, 3, 4. You can see. So that is the summary explanation to audit risk. Right? So I explain this little in detail. Examiner can test this. So moving on. So if there is any question, I can answer. Any question so far? Sikra, did you understand it properly? Come on. Is that clear? Can someone answer to my questions? Hello? Amali? Sorry. Tasiru?
Yes, sir. Clear.
Clear, right? Fine. Okay. So I'll go back to the second question. State, briefly explain 3 components of audit risk. That is also done. So first question we have answered. Now I will move into question number 2. Of course, I believe it is very simple. I'm not going to explain this, but answer is there in the model answer. That is from very easy area, which is code of ethics. Therefore, you can go into that and pay some attention. But let me take you through the conceptual summary that I had developed, and I'll explain how do you read it. Right? Fine. Code of ethics. That is my second area. I'm going to explain code of ethics. Look at this. මෙතන තියෙනවා හරිම logical explanation එකක්. Right? This is a logical explanation with the relationships between each and every element. So remember, this is mandatory question in your paper, right? If I show you, right, last time paper, definitely this should have been tested. Right here, question number 3. Here, code of ethics. Explain the auditor concept of independence. Right? Question number 6 for 5 marks. That's why I told you this is very critical area, and you can earn easily maximum 5 to 10 marks. Right? Fine. But since it is important, let me explain quickly. Right? Again, this is not a detailed explanation, but I'll take you through at a glance. Right? Fine. Code of ethics. This is a very focused exam session. right? Listen to me properly and grab these, then you can map this in your mind, right? So when we talk about code of ethics, there are three things to learn. Only three things to learn. What are they? Number one, we need to understand 5 fundamental ethical principles. 5 fundamental ethical principles. And 5 threads. Threads for what? Threads to fundamental ethical principles. Here it's 2. Threads to fundamental ethical principles. Right? And third element, how do we reduce or how do we eliminate this threat? How do we eliminate threats? By applying safeguard. Right? How do we reduce threat? Applying safeguard. That is the third component. So when we learn code of ethics, only three things to learn. Number one, fundamental ethical principles, threats, and safeguard. Examiner will test your understanding, examiner will test your knowledge only from these 3 areas, nothing beyond these 3 areas. Remember it. Right, I'll quickly take you through one by one. When we talk about fundamental ethical principles, only 5 fundamental ethical principles are there. Number one, AAT Institute wants all AAT members and their students to follow these 5 fundamental ethical principles. Number one, integrity. Integrity means honest. Avanka wenna. Right? It's a make me diagram. If you have this diagram in your mind, any exam question related to code of ethics area you can manage. For sure. It's a guarantee that I can give you. Integrity. Integrity means you are straightforward. You're honest. That is integrity. Right? Objectivity. Objectivity means you are not biased to anyone. You are independent. Right? Simple example. Now let's say who appoint auditors? Who appoint auditors? Shareholders of the company during annual general meeting or board of directors during annual general meeting. You'll appoint as auditor. Since they appoint you as auditors to the company, can you work according to their instruction? No way. You can't follow their instructions. You are an independent person. You know what you should do and what should be the end objective that you are going to achieve. All audit procedures you developed, not by the client or board of directors. If they want you to do certain procedures, which are so let's say you want to do some audit procedures, but they don't want. No, you can't agree for that. If they don't ask, let's say, don't call external confirmation from these suppliers, customers. If you listen to them, you're biased. So unbiased, independent is the objectivity means. Professional competence and due care, third element. Professional competence and due care means, let's say you are a qualified AAT accountant somewhere in 1995. Now, how many years? 30 years or yeah, almost 30 years gone. 1995 to 2005, 2015, and now for 2025, 30 years gone. You have not updated your knowledge from 1995 up until now. Are you competent? No. Competent means basically knowledge, skill, and experience. So third ethical principle is to keep your knowledge up to date. Your knowledge should be updated regularly. Due care means what? Due care Due care means what are සැලකිලිමත් right? You have to put extra attention to that, which is called due care. So that is third one. Fourth one, confidentiality. What do you mean by confidentiality? Confidentiality means client's confidential information. Client's confidential information means when you audit to your client, you are exposed to sensitive information of the client. So you can't disclose them with a third party. Right? Whether අක්කත් එක්ක මල්ලිත් එක්ක යාළුවොත් එක්ක, you can't tell this company sale is this much, this company having this much of cash flows, this is their next 5-year plan, their share price is this much, they are going to grow into these products, this is their diversification strategy, this company is having this much of frauds. You can't, should not disclose to third party unless it is required by the law to do so. If law required to do it, yes, you can do it. Otherwise, you can't. Right? Fine. Give me a second. One urgent call is coming. I need to answer it. Give me a second. Hold on. Okay. I hope you can see my screen again. Right. Fine. Okay, so those that is fourth one. Fifth one says what? Professional behavior. Meaning, don't bring discredit to your profession. Discredit means don't damage AAT Institute goodwill. You have to protect your professional image, professional behavior. That's why auditors, you wear long sleeve shirts, you wear a tie. When you put meetings, when you talk to client, when you have discussion meeting with client, you have to respect them. So that is professional behavior. That is not professional behavior. So these 5 fundamental ethical principles you need to maintain. That is what the AAT Institute expectation. But at the same point, they have identified, even we ask students, members to maintain this ethical principle, because of these reasons, these threats, these fundamental, there can be non-compliance with these fundamental ethical principles. Because of these reasons, we identify them as what? Threats. These are the threats to these fundamental ethical principles. Number 1 threat is what? Self-interest threat. Self-interest threat means it can be financial interest or non-financial interest. What do you mean by that? Self-interest threat means, in short, it's like this. I'll take simple examples and you will understand. So you are auditing one client. Then you have identified, not you have identified anything. Every day, accountant of the client and you are having a drink evening at the end of every day during the course of audit. Now, he is spending money on this. Now, one day you have identified a fraud, but now you can't disclose it because of what? The benefits that you have taken from them, non-financial benefits, gift and hospitality you have taken. Another example, if I tell you, client is asking you to join as finance manager, employment with client, financial interest. So because of those interest, certain principles can be violated. Even though you have identified misstatement, because of these threats, you will not disclose. Client is asking, right, I'll give 5,000 or 50,000 rupees not to disclose this in the audit report. If you accept it, financial interest. It's violating not integrity. It's violating objectivity, your biased management. Self-interest rate will be created. Problems to this fundamental ethical principle. Familiarity threat. Second one. Familiarity threat means, let's say you are auditing JMC's financial statement. You are the finance manager. Your wife is working as accountant, auditor. The wife is auditing husband's work. Familiarity threat will be created. Do you think that husband will or wife will find faults of husband's work? No, that will not happen. So auditor will not properly audit because of the relationships we have. Not only family relationship, long association. Now let's say audit is auditing client's financial statement from last 10 years almost. 2010 up until now. It's almost 14 years old now, the relationship. Now client and audit is like friends. So that creates familiarity threat. That creates familiarity threat. To these fundamental ethical principles. Now self-review threat. Third one. Self-review threat means you are auditing your works. In Sinhala හොඳ කතාවක් තියෙනවා ඔකට. මොකද කියන්නේ? හොරාගේ අම්මගෙන් පේනවා කියන්නේ. That kind of work. Example. Now let's say bookkeeping. Auditor can do bookkeeping, right? Auditor prepare financial statements. Auditor prepare financial statement and auditor audit same financial statement. It is self-review threat. Let's say client's finance manager left from the company close to the year end. Because of that problem, client want auditor to engage in preparation of financial statement. Yes, auditor helped. Now, auditor has to audit the same financial statements that he has prepared, which will create what? Self-review threat will be created. Self-review threat will be created. Another example for this. Now let's say property, plant and equipment valuation. So auditors, valuers involved in this valuation. So firms also having their own valuers, right? Or else now, right, forget about, all right, that simple example, right? Revaluation. Now you are auditing a revalued figure valued by whom? Auditors expert, auditors valuer. තමන්ම වැඩේ කරලා තමන්ම audit කරනවා. It is called what? Self-review threat. Another example, let's say tax return. Auditor can prepare, auditor can support in the preparation of tax computation. So auditor support to prepare tax computation. Right? Auditor support to prepare tax computation. Now the same tax figure you are going to audit. Same tax figure you are going to audit, which will create what? Self-review threat. Self-review threat will be created. Fourth one, advocacy threat. Advocacy threat. Advocacy threat means you are promoting the client's position. This client is having this kind of 5-year plan. 5-year plan. That plan, 5-year plan, right? 5-year plan. That plan, because of that plan, share price will increase by this percentage. Share price will increase this percentage. Advocacy rate will be created. How? Now, once you promote your client saying that your share price will be increased this much, you have to support for that answer. Your support, you have to back that decision or your statement. So that will create a threat. That will give you a pressure, which is called advocacy threat. You are promoting client's position. Fifth one, intimidation threat. Intimidation threat means client is pressurizing you, right? Client is pressurizing, undue influence is putting. Example, right? Let's say you found significant misstatement or fraud relating to revenue recognition, right? Revenue recognition is wrong. It is not in line with IFRS 15. Now, client is telling you, look here, auditor, if you report this, we will remove you as auditor from next year onwards. If you report this fraud, then auditor බය වෙලා. මම මේක දැම්මොත් එහෙම මගේ audit fee එක ලබන්න ඕන අඩු වෙනවා. මොකද මේ auditor මේ client මාව දාලා යන්නේ. intimidation threat will be created. Pressure. These are the 5 threats to this fundamental ethical principle. Now, once you identify that, you can't sleep properly, right? You have to take certain actions to get out from that risk or threat, or to reduce that threat to a great extent. Because what we can do, we can apply safeguard. Safeguard means how do we prevent that threat, or how do we eliminate that threat. So about it. So those safeguard, I'm not invest more time on this because this is the important part. Safeguard, you have to think and write, right? But certain safeguard I have given here, right? But safeguard, basically we can classify it into those 2 categories. Safeguard created by profession, legislation and regulatory environment, safeguard creating working environment, right? Legislation, profession and regulation, list of safeguard you can see here. Basically, in other words, in short, safeguard created by your AAT institute and a regulatory environment. Simple example, let's say if you violate this fundamental ethical principle, AAT institute will take certain actions to remove your membership. So that is safeguard from legal environment or your profession. Other safeguard is from your working environment. වැඩ කරන තැනින් safeguard එනවා. මොනවද තියෙන්නේ safeguard, common safeguard trainings they are giving awareness sessions, they explain your importance of complying with this code of ethics, right? Those are working environment, right? The list of things you can see here, right? So that is about code of ethics. I'm giving you some insights. So this is a mandatory question where examiner can put nice questions for maximum 5 to 5 marks, right? Fine. Okay, done. So 2 areas I have completed by now. Code of ethics. I'll send this Excel after this session. So it has all the standard. You can go through it with the existing knowledge you have. And I recommend you to have that conceptual diagram in your mind before the exam to manage any exam question, right? Fine. Okay. Moving on to the next question of the paper. So here with that, I believe you can answer this question, right? Attend at home, go through it. Okay, before I come to question number 3, which is external confirmation, those are standard. Let me straight away jump into a very important chapter, which is audit reporting. It is not difficult for me to jump into that area because you have this knowledge now, right? Fine. So let me go into a recent paper and show the question. It is also mandatory question. The today's focus is to go through mandatory questions, right? Fine. Here, question number 9, I believe. Yeah, here. During the meeting with CEO, he mentioned that auditor's objective should be to identify errors and frauds in financial report. All right, what is not the case? Audit report. Give me a second. Question number 5. State 4 matters that should be considered in forming an audit opinion. 4 marks. Discuss the physical stock verification method of valuation of inventory will effect on auditor's report. 6 marks. Remember, mandatory 10 marks will be there in your paper, right? This is compulsory question. Question number 5 in this time. It's a mandatory question. 10 marks. Now I'm going to give some insights how to earn this 10 marks, right? For that also I have a nice conceptual visualization. Listen to me properly. I'll take you through that conceptual visualization. So with that you can, manage the exam question. I believe this will help you. I don't know whether you have seen this diagram before, but this is very nice, concise, important, summary diagram, audit report. With this, I'm going to explain you the entire audit report in detail. If you are with me, if you go follow my instruction, if you listen to me properly, earning this 10 mark is not a big deal, right? I'm explaining this in a different way. I don't think that you have learned audit reporting in a simple manner in one diagram like this. Okay, let me start. There are 4 standards. Basically, no more than 4 standards are there, but here I'm primarily focusing on 4 standards. Number 1, SLA US 700, which is unmodified opinion. This standard explain you how do we deliver unmodified audit opinion. So if SLA 700 is for unmodified opinion, there should be another opinion, another audit report for what? Modified opinion, right? Unmodified. And other one is what? Modified opinion. Modified opinion. Modified opinion is SLA 705. 700 for unmodified opinion. 705 is for modified opinion. So most of the questions are from this modified opinion standard. Modified opinion standard. SLA 705. That is standard. Okay. SLA 700. Unmodified opinion. How do we deliver unmodified opinion? These are the 3 ways. Simple this standard is. Right? You can say financial statements are true and fair view. Or you can say financial statements are free from material misstatements. Or you can say financial statement present fairly. All these 3 are unmodified opinions. Same assurance you are giving in a different ways. We call it as unmodified opinion. Unmodified opinion. So this is there in the opinion section paragraph in auditor's report. Auditor's report. So there are 15 or 16 elements in your audit report. I'm not going to go through audit report format, which is there in your study pack. Of course, if you have gone into classes, definitely in those notes you can see element of audit report. But the content is what? You will deliver unmodified opinion. This is the way of delivering. The SLA 700 is that. But remember, very important thing, when we compare unmodified, modified and other elements together, for us to give unmodified opinion, remember, we must have sufficient appropriate audit evidence. So remember that. Without sufficient appropriate audit evidence, you can't say financial statements are true and fair. For you to deliver true and fair opinion, it is required to have sufficient appropriate audit evidence. Here I have a question. Tell me, what is mean by sufficient appropriate audit evidence? Sufficient and appropriate means what? In your language? Can someone answer that? Even? Any volunteer? Come on. Come on.
Quantity of audit evidence.
Exactly. Quality and quantity. Sufficient and appropriate means quantity and quality. So you must have quantitative and qualitative audit evidence to give this opinion, unmodified opinion. So modified opinion means what? That is the important part. Remember, this is very short explanation, but with all insights, right? Maybe diagram you can manage any exam question for sure, right? Modified opinion means, right? Modified means you are modifying audit opinion because of 2 reasons. When you have these 2 reasons, you have to modify audit opinion. Number 1, financial statements are not free from material misstatements. Financial statements are not free. Meaning financial statements are having frauds or errors. Financial statements are having fraud or errors. When you have fraud and errors or fraud or errors, can you give unmodified opinion? You have to go for a modified opinion. What do you mean by financial statements are not free from material misstatement? Meaning is what financial statements are not in line with accounting policy, right? In other words, this is because of due to non-compliance with accounting policy. Something wrong with accounting standard application. In other words, something can wrong with appropriateness. You have not selected accounting policies appropriately. Example, assets are not depreciating, stocks are not valued at lower of cost or NRV. So this is because of this reason. You can say your accounting policy is not appropriate. සමහර asset තියෙනවා depreciate වෙන්නේ නැහැ. Stock standard අනුව measure කරලා නැහැ. Right? Due to non-compliance with accounting policy. Selection is not appropriate. Or something wrong with method of application. You have not applied this properly. Something wrong with method of application. Something wrong. Meaning, it's not consistent. Sometimes you depreciate straight line method. I කම්මැලි තුනම ආයි කමහරු දැන් ගෙන අපි reducing balance method එකට ආයෙත් යනවා straight line method එකට එක අවුරුද්දක් revaluation කරන අනිත් අවුරුද්ද cost model එකට යනවා right 1 year you compare NRV and cost and select the lowest, other years always cost. No consistency. Method of application is wrong. Third one, your notes are not adequate. The presentation is not good. Right? Because of these three reasons, your financial statements are not in line with your accounting policy. When your financial statements are not in line with accounting policy, what you have to do? You have to modify your audit opinion, which is called financial statements are not free from material misstatements. Another reason for you to give modified opinion. So I explained only one reason. One reason for you to give modified opinion. But the short answer, there are non-compliance with accounting standard. In other words, non-compliance with finance policy, accounting policy. Second one, inability to collect sufficient appropriate audit evidence. I told you, in audit report, main focus is to give what? Opinion. Main purpose of audit report is to give what? Opinion. Opinion. For you to deliver opinion, you must have sufficient appropriate audit evidence. Without sufficient appropriate audit evidence, you can't give opinion. But there are certain cases where you can't collect sufficient appropriate audit evidence. You might not be able to collect sufficient appropriate audit evidence. Because of what reason? You might not be able to collect sufficient appropriate audit evidence because of three reasons. Number one, it's beyond the control of entity. Beyond the control of entity. Because of fire, all the document destroyed. And because of natural disaster, all the documents destroyed. Because of reasons like this, which is beyond the control of entity, you can't collect sufficient appropriate audit evidence. You want to audit sales, but no invoices. Sometimes you can't collect sufficient appropriate audit evidence because of the timing issue. What do you mean by timing issue? Auditor appointed after the financial year end. Your financial year end date is 31st March 2021, let's say 31st March 2021. Auditor appointed somewhere 5th May, after 1 month from the financial statement date. So here you taking 100% physical stock verification to ensure existence of inventory. But you are not part of this inventory verification. So how do you give assurance on existence of inventory? You can't. And because of timing issue, you might not be able to get sufficient appropriate audit evidence. Other reason for inability to collect sufficient appropriate audit evidence is what? Management enforced limitations. Management, you don't call external confirmation from ABC because ABC data is very sensitive for us. Therefore, don't make him upset. Don't go and call external confirmation from him. Because of these management enforced limitation, that is, because of these three reasons, sometimes auditor cannot collect sufficient appropriate audit evidence. You might not be able to collect. Then you have to give what? Modified opinion. Modified opinion. Then what they know? Modification can be there because of two reasons. One is non-compliance with accounting policy. Other one is inability to collect sufficient appropriate audit evidence. You don't have sufficient appropriate audit evidence. Then you have to modify the opinion. How do you modify? That is the important thing. කොහොමද අපි මේ modification එක කරන්නේ? නිකන් ඒ ආව ටික modify කරන්න බෑනේ financial statements. First you have to see when one of these two reasons is available. Either non-compliance with accounting policy or inability to collect sufficient appropriate audit evidence, carefully see whether that is material or not. Material means you apply SLA is 320. Materiality standard. You have to see whether that particular issue is material or not. Material or not. If it is material, you issue what? Qualified opinion. Qualified opinion. What do you mean by qualified opinion? Except for opinion. Except for. Now let's say inventory is measured at cost without taking lower of cost to NRV. Standard want you to take lower of cost to NRV. But you don't worry about standard requirement and you always go ahead with what? Cost, which is completely wrong. According to that is what? Non-compliance with accounting standard. According to your measurement, it is material. It is material. Right? It is material. Then you give what? Qualified opinion. How do you deliver? Except for opinion. How do you? Except this inventory matter. I'm explaining you. Except for this inventory matter, the rest of the company financial statements are present fairly. Except blank, except this inventory matter, a company financial statements are present fairly. Financial statements, which is called what? Qualified opinion. When non-compliance with accounting standard or inability to collect sufficient appropriate audit evidence are material, you will deliver qualified opinion. If it is not material, simple answer. If it is not material, what is opinion? Can someone tell me? If it is not material, you have a limited time, therefore you have to answer the question quickly. If it is not material, what is the opinion? Come on, if it is not material, unmodified opinion, simple. Unmodified opinion will be delivered. Unmodified opinion. Right? Fine. Now we have a big problem. What is that? If it is material qualified opinion, that's fine. If it is material and purposive, ප්‍රමාණාත්මක material කියන්නේ ප්‍රමාණාත්මකයිනේ. එතනෙමුත් එහා කියලා ප්‍රශ්න ටික දරුණුයි. හිතනට වඩා බරපතලයි තත්ත්වය. එහෙනම් අපි දන්න මොකද්ද? material එකකින් එහාට ගිහිල්ලා purposive impact එකක් තියෙනවා. purposive impact එකක්. material and purposive. තත්ත්වය වඩා බරපතලයි. Then what is opinion? Adverse opinion will be delivered. Adverse opinion. Not material, material එහා ගිහිල්ලා. මම ඔයාලට උදාහරණයක් කියන්නම්. Listen to me properly. Right, මෙන්න මේක උදාහරණ. JMC acquired, assume JMC acquired IAS, online accounting, one of your competitor. Then you have to prepare, JMC has to prepare what? Consolidated financial statements. Consolidated financial statements. But they don't prepare consolidated financial statement. It's a serious violation of accounting standard. It is material and pervasive. Material components we have not consolidated. Material and pervasive. Then what opinion? Adverse opinion will be delivered. Adverse opinion. Another example. In addition to this inventory problem, what is the problem? Inventory measured at cost without considering lower of cost to NRV. In addition to that problem, there are some other issues also. There's a revenue misstatement related to revenue recognition. Certain expenses are overstated. For some invoices, you have not charged expenses. Many issues. When you have many issues, not stick to one issue, many issues, that is material. Then you have to deliver what opinion? Adverse opinion. At that time, you have to deliver adverse opinion. How do you deliver adverse opinion? If it is qualified opinion, except for opinion. Adverse opinion, simple. Financial statements are not true and fair view. Or else you can say financial statements are not free from material misstatements. Or else you can say financial statements are not present fairly. Not present fairly. Not free from material misstatements. Not true and fair view. Or not present fairly. මේකට අපි කියනවා unmodified එකට not කියලා එකතු කරනවා. Right? Example you can see here. That is what I explained. Right? Fine. Then other side, this inability to collect sufficient appropriate audit evidence. I told you, no sufficient appropriate audit evidence. That is also can be material and pervasive. Material and pervasive. Right? Example, listen to me. Now, you have invested, let's say JMC has invested in IAS, online accounting or whatever competitor. It is not a subsidiary, but let's say it is an associate or joint venture. Now you wanted auditor, JMC's auditor, you are the group auditor, you wanted to talk to component auditor. But management put restrictions. No, don't go and talk to them. Right? We don't like if you reach to our component auditors. You can't do it. Management enforced limitation, which is very serious issue. Not only material, it is very significant component of the group. Then you have to tell, you have to deliver disclaimer opinion. Why disclaimer opinion? You don't have sufficient appropriate audit evidence to give an opinion. When you have sufficient appropriate, when you don't have sufficient appropriate audit evidence and the problem is serious, you have to deliver what opinion? Disclaimer opinion. Disclaimer opinion means we do not express an opinion. We මතයක් ප්‍රකාශ කිරීමෙන් වැළකී ඉන්නවා. We do not express an opinion. We cannot express an opinion. Right? Give me a second, one notification has come to your group to check whether regarding this session or not. Okay, fine, done. Okay, right. If inability to collect sufficient appropriate is very serious, disclaimer opinion. Now, this is the summary of what? SLA 705. You can see conceptual summary here, small summary. Audit opinion, it can be unmodified, modified tonight, qualified, adverse, disclaimer. Right? If material misstatement is material and pervasive, adverse. Inability to collect sufficient appropriate audit evidence, material and pervasive, disclaimer. If both reasons are material, qualified opinion. This is summary that I explained. Right? Fine. That is SLAS 505. In addition to that, Examine is testing another standard, which is SLA 706, which explain emphasis of matter and other matters. What do you mean by emphasis of matter and other matters? Understand the difference also here. Emphasis of matter means here auditor is trying to give extra attention to the users on the matters disclosed in the financial statements. Something has been disclosed in the financial statements, but you wanted users to put some extra attention to this matter. Example, there's a pending litigation against the company, right? Customer or suppliers, they have filed cases against the company. Now you decide, right? It is required users' attention to that case. Then you put a note saying that paragraph emphasis of matter. We draw your attention to this matter explaining note X in the financial statement. Something has disclosed in the financial statement. You are trying to put users' attention to that. To get that attention, you include what? Emphasis of matter paragraph. Other matter paragraph is also a paragraph you include in auditor's report. The difference between emphasis of matter and other matter paragraph is that other matter paragraph, whatever reason, whatever you are going to include in that paragraph, has not included in the financial statement under the notes. Or you draw attention to the users or readers of audit report, but those matters are not disclosed in the financial statement. Whereas emphasis of matter related matters are disclosed in the financial statement. That's the difference. So this is also really important standard. So with this explanation, I recommend you to put your attention to these three standards. Nowadays, in addition to this, what is important or key pet area of your examiner is SLAU 701, which is there in a different diagram. Let me open that as well. Right here, auditor's report. Right, SLA 701. 701 is for what? Key audit matters. Everything up standard here. So I recommend you take a screenshot or take some notes on this, because this will not be there in the Excel that I'm going to share with you. Right, fine. Key audit matters. Let me explain the requirement for this standard. This was newly introduced somewhere in 2020. Now I can't say it is new. Give me a second. There's an urgent call that I need to answer. Right. Okay. Okay. Sorry about it. Right. Key audit matter. Key audit matter means CAM. You get a CAM here. I'll explain the reason to introduce this standard. Now, if you look at Sri Lanka's or world, if you take universally, almost all audit reports are true and fair opinions. It's like no frauds, no errors, no material misstatements in the financial statement. So almost all the audit reports are clean audit reports, in other words, unmodified opinions. where real issues of the business are not bringing to users' attention. That was a problem. That is because of many reasons. Let's say if you highlight something next year, your client will remove from your auditor's office, right? So there can be, damage to relationship. All this can arise because of that reason. Because of that reason, auditors are also not, this is a real issue, right? Auditors are not always giving qualified opinions. To overcome that, standard developers, they introduce another standard called key audit matters, right? You give unmodified opinion, that's fine. But serious problems that you are seeing, serious risk factors that you're seeing in your client, you highlight in a separate paragraph called key audit matter. What is the definition of it? Technically, we call it as what? Key audit matters. Those are matters in auditor's judgment. Auditor's judgment were more significant in the audit of financial statements. Meva auditor's judgment again more significant matters. I'll explain 3 types of more significant matters. But remember, key audit matter is mandatory for public listed companies. It is mandatory for public listed companies. No choice. For private limited companies, yes, if there are key audit matters, you can include it. It is not mandatory, but for public listed companies, it is mandatory. Other thing, CAM do not constitute a modification of the audit report. Once you include CAM, it is not a modification to an audit report. Right? You can include CAM, but it is not a modification. Like modification nak penne. Right? Modification nak kil dana CAM ekak dammatte. That is also you have to understand. It's some modification still. Disclaim an opinion. Disclaim an opinion means මතයක් දීමේ වැලකී සිටිනවා disclaimer කියලා කියන්නේ. When we are giving disclaimer opinion, when inability to collect audit evidence, when you don't have audit evidence and the matter is so significant, we are giving disclaimer opinion. Key audit matter section must not be included in the audit report. These are some insights about key audit matter. When you deliver disclaimer opinion, meaning no audit opinion in the financial statements, then no CAM. Key audit matter is you should not include, basically. Right? Fine. So those are some key insights. So what you will include in CAM paragraph? There are 3 things. Significant risk that you identified during planning stage. At the planning stage, if you have identified significant risk, what do you mean by significant risk? Complex unusual transactions, right? Significant risks that are those that require special audit consideration. So those matters you'll identify as what? CAM. Now let's say simple example I'll tell you. One person is managing the entire cash management process. No segregation of duties. One person is collecting cash, depositing the bank, update sales book, update cash book, everything handled by one single person. Significant risk. Significant risk. So then, when you see these significant risks, you have to include that where? Under CAM paragraph. Second one, significant judgment. So when you prepare financial statement, you made a lot of judgments. Depreciation is a judgment, fair valuation is a judgment, NRV is a judgment, provision is a judgment. So all are judgments. If you made significant judgments, those you will identify, you will include where key audit matters. Let's say JMC acquired Shangri-La Hotel. So then you have to value Shangri-La Hotel. So when you value Shangri-La Hotel, there are a lot of assumptions, estimates you made. So all these estimates, assumptions, you have to, properly audit the reasonableness of those assumptions. So if those are unreasonable, you will not basically give unmodified opinion. But sometimes you can't challenge those assumptions, right? Because those are estimates, management judgment. So those significant judgment, if you are seeing, you have to include where key audit meta paragraph. Significant event happened during the year. If you see significant event, let's say if you acquire new business, if you dispose new business, or let's say if you have come across any, let's say voluntary retirement scheme, if you have scaled down business, all these significant events you have to include where under key audit meta paragraph, key audit meta paragraph. So those are areas you include in key audit meta paragraph. This is examiner's famous question. Therefore, you have to put some extra attention to this area. I'll summarize again. Key audit meta means you include significant risk, significant judgment, significant event happened during the year. Those are the key audit matters. Including key audit matter is not a modification to the report, basically, or it is not a constitute to a modification. Right? If you understand, all right, now it has been modified. No, that is not the case. Right? Other thing, for public listed companies, this is mandatory. Mandatory. Right? When you give disclaimer opinion, no modifications, no modified audit opinions will be given. Right? Fine. So that is the summary of audit reporting chapter. With that, you can, I will share this answer. With that, you can, go through at home. Right? Fine. I'm giving you some insights to pass this exam in this seminar. Right? Fine. Then if I move into recall audit evidence, right? Let me again summarize it in this diagram. So you can see standard number here. So audit evidence related standard I have summarized in which color? Yellow color. All these standards are relevant for your level, but let me explain you the basic standard. Basic standard. With this, you can put some attention to other standard as well. Okay, I believe all of you are with me. Right, done. Right. So what we have covered, 3 areas. Engagement risk we have covered, audit report we have covered, code of ethics we covered. Now I'm going to explain you audit evidence chapter. Right. Okay. Audit evidence. Why do we require audit evidence? This is the way you should learn this thing. Huh? Why do we require audit evidence? To provide reasonable assurance. To provide a reasonable assurance, yes, you need what? Audit evidence. Without audit evidence, you can't give reasonable assurance. That's why you want audit evidence. Then, first question is clarified. You want audit evidence to provide reasonable assurance. Second question, how do you collect this evidence? Audit evidence path then, how do you collect audit evidence? You have to do something. What you are doing? You perform what? Audit procedures. 2 questions I clarified. Why do we perform audit evidence? Why do we require audit evidence? To provide reasonable assurance. How do you collect audit evidence? By performing audit procedures. By performing audit procedures. Right? Fine. Done. We have answered to those questions. Now, audit evidence standard says auditor must collect sufficient and appropriate audit evidence. What audit evidence? Sufficient and appropriate audit evidence. Sufficient and appropriate means what? Sufficient means, in short, how much? Appropriate means how good. In other words, sufficient means quantity, appropriate means quality. In short, auditor should collect quantitative and qualitative audit evidence. Quantitative and qualitative. Meaning, auditor should have Auditor cannot rely on one evidence, in other words. Multiple audit evidence, many audit evidence you should collect. Right? This is very simple. Sufficient means quantity. Sufficient means quantity. Quality, appropriate means quality. Give me a second. 1 second. Okay, fine. Appropriate means quality. Appropriate, to be appropriate. Audit evidence to be appropriate and quality to be appropriate. Audit evidence should be relevant and reliable. Relevant and reliable, right? To be relevant and to be reliable, certain factors to be satisfied. To be reliable, audit evidence are reliable. 5 elements should be satisfied. 5 requirements should be satisfied. Not element, 5 requirements should be satisfied. Number 1, audit evidence. Some of the audit evidence are internal audit evidence, some of them are external audit evidence. Always remember, external evidences are more reliable than internal evidence. Because internal evidence from within the business, you collect those evidence. Within the business. Right? Within the management. But external evidence you will collect from external parties, suppliers, customers, bankers, experts, valuers, right? Independent evidence there. So standard says, not a standard always, external evidence are more reliable than internal, which does not mean that internal evidence are not reliable. But compared to external evidence, always internal evidence, compared to internal evidence, external evidence are more reliable. Don't misunderstand. Internal evidence are not reliable compared to internal evidence, external evidence are more reliable. To be reliable, to be appropriate, to be qualitative, you should have external evidence. Second one, to be reliable, internal evidence are more reliable when internal controls are sound, when internal controls are effective. Why I am saying like that? When internal controls are effective, your control environment is good. Then you can rely on internal controls, internal evidence, basically. Third one, original documents are more reliable than copies. Original documents are more reliable. Now let's say you're auditing sales. When you audit sales, some original invoices are given by the customer or the client, and some invoices are for photocopies. Now, can you rely on photocopies? It is very difficult. You can't. We don't know whether those are fake documents or not. We don't know whether those are modified or not. Now let's say you're auditing land and building and vehicles. They are giving photocopies of deed, photocopies of vehicle registration book, photocopies of photocopies of let's say insurance. So you don't know if it's originals or not. Always remember, originals are more reliable than copies. To be reliable, to be qualitative, third character is that. Fifth one, direct evidence are more reliable than indirect. Auditor should be able to collect direct evidence from parties. Let's say bank confirmation. So bank confirmation, banker should send directly to auditor. Debtors should send confirmation directly to auditor, not through the client. If you take it through client, reliability can be less. Client can amend the document, client can keep the document without sharing with auditors. So reliability can be questioned. Always, this is important. Fifth one, written evidence are more reliable than oral. Written evidence. Why it is that? Because if things are oral, verbal, can say I didn't tell that at any given point. That's why it is required to have written evidence. Now you can see, to be reliable, right? To be reliable, these 5 factors should be satisfied. Remember, always, I have highlighted one word more. Why? Simple example, when you compare internal, external, internal you can't say not reliable, but you are trying to say external evidence are more reliable than internal, of course. That is correct. To be reliable, these 5 factors should be satisfied. Then relevant. That is also important. I think this is the first time you're learning this thing. I don't know whether your lecturer has explained this properly, but remember this. A relevant mean for you to audit, let's say when you're auditing inventory, you perform a famous audit procedure is what? Perform inventory physical count, physical inventory verification. That is famous audit procedure you are performing, right? By performing physical stock verification, you are saying, all right, inventory is fine. We have audited inventory. No. Standard says relevant means one audit evidence should not address many assertions. Many assertions. You know, we are auditing financial statement assertions, no? Transaction and transaction, there are assertions. Account balances are there. Account balances, there are assertions, right? One evidence should not address multiple assertions. Simple example, let's say once you perform physical stock verification, that will make sure existence of inventory. By performing physical stock verification, you can't say inventory are completed, inventory valued properly, inventory rights and obligations are properly assessed. Everything you can't assess through one audit procedure, right? Meaning one audit evidence will not relevant for all the assertions. One evidence will be focused on one assertion. External confirmation is to make sure existence. External confirmation, physical stock verification is to make sure existence of inventory, existence of the balances. That is one. One evidence should not address money assertions, right? And second one, audit evidence should be accumulated for one assertion. When you are talking about assertion, let's say existence. Existence again inventory. Audit evidence 1, 2, 3. Likewise, multiple audit evidence should accumulate for one assertion. Then you can say relevant. Them are wrong. Correct. Relevant when make correct. One evidence, audit evidence should be accumulated for one assertion. Then this is correct. But if you're trying to address multiple assertions or many assertions through one evidence, then there's a problem. Then we can say those are not relevant. So this is the fundamental idea behind audit evidence, basic standard, right? Audit evidence should be sufficient and appropriate, to be appropriate, relevant, and reliable. So this model can be tested in your exam. Now there's a question in your model paper. This is the way examiner can test. Here, question number 3. State 2 reasons why external confirmations are considered to be reliable evidence. External confirmations reliable. External confirmations are reliable. Why? Because if you look at this, right? If you look at this model, here it is from external party. That's why it's reliable. Reliability and reliable na karana pahak tiyena ne. Pah tama දැන් උපයෝග කරගන්න අපි. You have to use these 5 things when you answer this thing. Why it is reliable? It is from external environment. Therefore, it is reliable. It is from external environment. That's why it's reliable. Another one, it is written evidence. Written evidence. That is why it is reliable. Written evidence. And it is directly from auditor. Directly you are receiving, auditor is receiving from third party. Because of these reasons, it is reliable. That's the answer. Simple, right? That is how you plan things for the exam. Fine. Okay, I explain you 4 chapters now, 4 key elements. Code of ethics, audit reporting, audit evidence, basic standard. Once I share this Excel, go through other yellow color highlighted standard which are relating to, audit evidence series. Color kahapading highlight color in all standard that are relevant, that is relevant for what? Audit evidence. Out of these, few standard can be tested in question number 7 or 9. Right? Fine. Okay. that we have done. Audit reporting and audit evidence basics standard we have done. In addition to that, audit risk also we went through, right? Fine. So here, if I summarize this Excel, financial statement assertion, general principles of auditing, audit procedures, audit planning, everything I have summarized properly, right? Fine. Now I'll take simple, again, area, audit procedure. This is really important, right? Again, in your paper, maximum 10 to 15 marks can be tested from this area. Therefore, it's required your focus attention to this as well, right? Fine. Now, how can I start this thing, this session? When you heard this word called procedure in your paper, be mindful about the prior word to the procedure word. Now here, prior words is what? Audit. Whether examiner is testing audit procedure or risk assessment procedures or further audit procedure or substantive procedure or substantive analytical procedure, what procedure is examiner asking? That you have to be careful when you have answer the exam questions. Now, all audit procedures, this is a powerful message I am delivering with you, right? All the audit procedures in this audit universe, can divide into two procedures. Only two procedures. One is risk assessment procedure, other one is further audit procedures. We look at audit procedures වර්ග දෙකයි. Risk assessment procedure and further audit procedure. Risk assessment procedure you perform to identify risk of material misstatement. Very simple, short definition. Your risk assessment procedures currently to identify risk of having fraud or errors. You can risk of material misstatement again. Here you can see in the screen. To identify risk of material misstatement, in other words, risk of having fraud or errors, you perform what? Risk assessment procedures. Short answer. According to your risk assessment, risk of material misstatement can be high or low. Let's say you perform certain procedures and understand internal controls are not properly established in the organization. No internal controls. Sometimes controls are there, but those are not working effectively. There's a problem. Then high risk. Internal controls are not effective now. High risk. Then risk of material misstatement is high, meaning risk of having fraud or error is high. Other one is low risk, meaning risk of material misstatement. Risk of having material misstatement is very low. Very low. Meaning internal controls are effective. Internal controls effective. Give me a second. Okay, fine. Right? Okay. Now, outcome of risk assessment procedure. Listen to me carefully. Outcome of risk assessment procedure is not the misstatement. Sometimes you will misunderstand this. Outcome of risk assessment procedure is what? You will identify the risk. You don't know whether misstatements are there or not. Only you will identify risk. That risk can be high risk or low risk here. High risk or low risk. Now, can auditor give audit opinion when you have a risk of material misstatement without concluding whether misstatements are there or not? Bad. Risk එක දැකලා දෙන්න බෑ opinion එක. Risk එක audit කරන්න ඕනේ දැන්. Once you identify high risk, Once you identify low risk, you have to audit them. Once you identify risk of material misstatement, you have to perform what? Further audit procedures. That is the second part of the audit procedure. Always auditor perform first what? Risk assessment procedure. Once you perform risk assessment procedure, secondly you perform what? Further audit procedures. Further audit procedures. Clear? You perform further audit procedures. Further audit procedures can be test of control or substantive procedures. අවදුරටත් කරන audit procedures, it can be further audit procedure, but it can be test of control or substantive procedure. මේ දෙකෙන් කොහොමද අපි selection එක කරගන්නේ? Standard එක කියනවා when your risk assessment is very low, according to risk assessment, risk of material very low. ඒ කියන්නේ මේ හොඳට internal controls වැඩ කරනවා. Internal controls are effective. That internal controls තියෙනවා. So then you perform what? Test of control. You don't put some more attention or more procedures, more time. Just check whether those controls are working effectively. Test the operating effectiveness of internal controls. Check segregation of duties, check approval for sales, re-performance bank reconciliation, perform physical stock verification. Basically, you check internal controls here. That's enough. Why? Because internal controls are effective. That's why you perform that. But when risk is high, again internal controls වැඩක් නැහැ. Internal controls තිබුණාට හරියට වැඩ කරන්නේ නැහැ. When you have high risk, don't stick to internal controls. You perform, test of controls. You perform substantive procedures. You have to now perform substantive procedures. What substantive procedures? Do substantive analytical procedures. Analyze trend, analyze reasonableness of transactions, calculate ratios. You do analytics. Hey, risk is very high. Based on the analytics, you test the transaction account balances, presentation, disclosures, detailed testing you have to perform. Let's say when you audit sales, take sales orders, dispatch notes, sales invoices, approval for them, whether all sales invoices are backed by sales orders, all sales that are recorded in financial statements are dispatched to customers. Detailed testing you have to perform. Why? Risk is very high. So all audit procedures you can put into this diagram. So this is the basic idea behind audit procedures. But nice thing is this, none of these audit procedures are performable audit procedures. These are classifications. Some of the procedures you perform come under test of control. Some procedures you perform come under analytical procedures. Some procedures will be test of detail. Some procedures may be substantive procedures. But what are the real audit procedures to collect sufficient appropriate audit evidence? Is this nature of audit procedures. This is the nature of audit procedure. But there are 6 natures of audit procedures. Remember, this is a powerful message. ඔයාලට audit evidence ගන්න දින ක්‍රම 6යි මොනවද? Inquiry, inspection, observation, recalculation, re-performance, and analytical procedures. So these are the 6 natures of audit procedures. You can use inquiry as risk assessment procedure. You can use inquiry as detailed testing. That doesn't matter. So this is the nature. This nature can fall under each of these categories. That's fine. But remember, for risk assessment, basically we use inquiry and analytical procedures. Through inquiries and analytical procedures, we perform the risk assessment procedures. Risk assess you based on those 2. Then, once you identify risk, to perform further audit procedures, rest of the audit procedures you can. So I think that your understanding is there with you, and all the definitions I have included here, you can go through. So that is audit procedure summary. So after audit procedures, once you learn audit procedures, you have to plan audit properly. So all these red color standard are planning related standard. Here, those are planning related standards. Planning related. 300, 315, 330, 240, 320, all these standards are planning related standard. So what I can do, I will share this Excel summary. This I have conceptualized for your easy reference, that you can go through all these standard with your comprehensive note and ready for the exam.